Good evening, everyone, and welcome to Almir Markets webinar. Today is 14th of December 2015. My name is Nenad, and as you know, we have a very important meeting in 2 days, Fed's meeting, where they will possibly do a rate hike. So all these setups which we will cover today should be taken really with extreme caution due to impending volatility. So do not be rushed to enter a trade. Try to stay calm, and definitely I recommend only taking smaller positions and intraday trades prior to Wednesday. So before we even begin this session, I will tell you that these setups are valid only if they reach the zone, POC zones, today or tomorrow. So not on Wednesday. Be careful with it. And once you are in a trade, if you are in a trade, then definitely protect your profits. Before we begin, our standard risk disclaimer, explaining that all online education materials are available on Almir Markets Estonia for a global audience. If you want to get a corresponding information on charting conditions and any other detail, you should visit almirmarketsglobal.com, select your country, and contact an appropriate entity. A risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Final part of risk disclaimer explaining that Almir Markets UK Ltd will take no responsibility for information accuracy. This is my personal analysis, and Forex is risky business. This webinar is for informational and educational purposes only. Okay, and of course, guys, if you hadn't done it already, you should have done it really a long time ago. Download Supreme Edition and enjoy Empowered MT4. You're trading with officially best MT4 broker. All session recap trades and analysis is done with Camarilla MACD, my personal method used for analysis, mostly for swing trading, but also for the analysis where we watch POC zones rejections. You need to give price a breathing room. You usually enter within 5 to 15 pips of the predicted level if it agrees with your system. Use scaling in. I have already scheduled a webinar where I will explain how scaling in can exponentially boost your profit and can exponentially down your losses. Okay? Respect your stop loss, add a spread to your stop loss, and remember, we always take one position, whichever hits first. So remember, guys, especially guys who are new, we take only one position. That means if the trade setup has been triggered, we take only that position, and we exclusively trade first touches of the zones. So the very first touch, when the price enters within the zone, that is the time when we pull a trigger. Subsequent entries, re-entries in the zone can happen, but usually the very first touch is most profitable one. I'm not saying, for example, if the price reached the zone, it hit the zone and it went like 10 pips in profit. If it retraces back, then it's okay to enter. But if it already made some 20, 25, 30 pips, then we assume that the setup is gone. And if you hadn't entered already, you shouldn't have made a trade. Okay, so only first touch of the zone, and subsequent touch if the price has not made at least 20 or 25 pips in our direction. So you need to remember that, guys, because very often you will miss maybe a trade setup. The price hits the zone, then it goes in our direction. And after 50 pips, you ask me, is it okay to enter again? No, it's not. So usually There is the law of supply and demand. We want to trade as professionals trade. We don't want to trade as retail traders, right? We want to be a little bit better. That is why we have good win to lose ratio. So it's very important that you understand this concept. We take only one position and we take the first touch within the zone. If we see a subsequent touch in the zone, then we can enter if the price hasn't already made at least 20 pips. If it made more than 20 pips, then we wouldn't trade. Okay, so we don't take subsequent setups unless the price has made less than 20 pips. Position trades are trend trades. Alternative trades are counter trend trades. Breakout trades and scalp trade levels are done independently, usually as a second entry. Depending on time and volatility, I really recommend using trailing stop, or as we call it, profit stop. Not less than 20 pips. Never. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. But as I already explained, because we will have Fed's meeting in 2 days, setups for today's webinar are valid only today and tomorrow until some time. Before Wednesday morning, you can take the trade. But if the trade setup happens on Wednesday morning, I recommend you not to trade because market will be very volatile. It's Fed's meeting and everything is possible. You don't want to be margin called, right? If you see that I post scalp levels, then those levels are very tradable at or very close to them. It's calculated by historical levels in Camarilla. You can add these levels to your system and definitely pay attention to my Twitter updates. They are very, very useful for all of you to see real-time updates. Now, guys, today we already witnessed a great setup from GBP dollar. As you can see, GBP dollar has made its way to target. When I start to write the analysis, the price was here. When I posted the analysis, the price dropped at POC zone around 51.10 to 00, and it rejected hitting our first target, which I predicted, 51.50. Bullish order block, the height of bearish candle prior to move up is called bullish order block. So this is bearish candle, and you see the height of the candle. Compare it to the history. Okay, so the height of this bearish candle before the move to the upside is called bullish order block. So this was our confluence, EMA 89. So you could have seen that price has rejected POC after the analysis. It hit POC, then it rejected. So you could have made 40 pips. I have updated it live on Twitter. Okay, I have updated live on Twitter. So this was for today. Now I'm not sure that I would buy here. It could, I will explain this setup a little bit later, but it already played out. So we need to wait a little bit. Also, guys, I have posted, if you're interested in my opinion about Fed rate hike, about possible euro-dollar movement, go to Forex Street Conversation with Forex Experts today and try to read it. I think it could be useful indeed. Also, if you haven't done it already, here on our trading blog, okay, I have updated a new entry which we and Chris do, and these are the movies you should definitely watch, guys. And my favorite, the Wolf of Wall Street movie, and I did a video review explaining what we could have learned from the Wolf, right? My favorite trading movie, definitely. Okay, guys, so that was it. Now let's see the previous week results. Previous week results are Euro dollar 130 possible pips, pound dollar 100 pips, Australian dollar, well, some people lost, some people won. I updated on Twitter that I would close it on break even. So it made some pips to the upside, like 20 pips, but I said to close it on break even. Pound yen was a loss, minus 65 pips. Dollar CAD didn't qualify, but the trend was captured. So total of 175 pips pool. Trade of the week, euro dollar, pound dollar. So that was the trade of the week. Let's see how it happened. This was euro dollar. This was the time of our webinar. And you can see that euro dollar trade, well, yeah, it hit here, bang, 130 possible pips straight from POC point. Pound dollar was definitely, maybe, I cannot say the trade of the, but yes, with euro dollar it was trade of the week along with euro dollar. Look at this, almost not a single pip of a drawdown. 49.60, bang, shooting up. So pound dollar was a great trade. We didn't have almost a drawdown, and look at this, it shoot it straight to the upside. Australian dollar, well, as I said, some people won, some people lost. I closed it at break even. The price has hit our entry zone here, and you can see it went up. So I should have put this blue line here. So basically it was like 25, 30 pips of profit. I updated it on Twitter as a break even. Pound yen was a loss. It basically hit our POC zone. It made like 16, 17 pips. But as I say, we never ever take less than 20 pips. So I am counting this trade as a loss. Dollar CAD unfortunately didn't hit our POC zone, and also it didn't hit a retest for a long. But as I said, the trade has been captured, and you can see heavy uptrend on dollar CAD, and you can see how the trade behaved. Look at this. Excellent setup. So as I said, for the previous week, total pips pool, total possible pips, 175. Now this week, now guys, please take this into consideration. This is a special webinar today because in 2 days there will be Fed's meeting. And as you can see in the bottom right corner, I have put a disclaimer. Due to impending Fed's meeting, all trade suggestions should be taken with extreme caution. And I really mean it, extreme caution, because we are not sure what will be, what will happen. And because of that, guys, do not try to overtrade. Especially if you get an entry here, manage your trade as soon as you are in a profit, like 20 pips minimum. If you don't get a trade, these setups will not be valid on Wednesday. That is important for you to know now. If you don't see an entry prior to Wednesday, do not take the trade setups. Even though if you still think that it can be good and profitable, do not do it, because there will be a huge volatility during, just before, during, and after the meeting. So euro dollar could be sold from 1050, stop loss 1085, targeting 0950. Buy position 1.0810, stop loss 0780, target 1.0950. Okay, so this is euro dollar. Let's see if we miss the entry. Yes, if there is rate hike, there is a lot of it's been already priced in, but guys, still it can be very, very volatile indeed. It looks we missed euro dollar entry. Well, we didn't miss it, I think. Well, we are very close, guys. Here euro dollar is very close. Yes, it already happened at the close, basically, but try to manage it, guys. I don't know if you want, if you really want to trade, you could try this. As I say, yes, the trade setup was happening. You see this prior candle just as we entered our session recap, but it's still valid. And see, let's wait and see. As I say, this you should take. I don't trade now, no matter, even if I think that euro dollar can be sold for some pips. I don't have any setups at this point. It will be very, very nasty, so I'm really not eager to trade at this point, really, because we can probably see a lot of volatility. And but as I already explained on Friday, bi-directional move. Now, guys, if you want to trade it, go ahead. If you want to trade it, go ahead. I won't be taking any setups at this point. Now, I don't say that you shouldn't trade, but you can see it's already rejected from the zone. So take it as I advise, okay? This can happen, but this week is we should be very cautious. Very, very cautious. And this is potential buy position. So we already hit our sell spot, so I don't know if we should take this one, but it could reject from the zone. Okay? Pound dollar sell could happen at 53.00 with 53.30 stop loss and 52 target. Now, I know that I told you today, as I explained, we had a good buy setup on a pound dollar. After the analysis, the price hit POC zone and rejected for 40 pips of a profit. I stated in the analysis that the first target is 51.50. So it already happened, and because we already made some pips with this analysis, my principle is telling me, no matter if I'm right or not, the rules, how Camarilla McD is saying, and my own observations are, next spot should be below the spot which gave us 40 pips. So we had, let me show you guys the screen. Okay, pound dollar. Okay, let me open it. Where is it? Okay, so pound dollar, we already had a rejection from POC zone here. So you could have made 50 pips with this. Okay, so 51.05 you see here. and it says here, at the time I was doing the analysis and posted it was 51.30. Just after I posted the analysis, the price hit our POC and went up. So we could have made 50 pips. Because of that, I want price to go below, slightly below I previously meant. So this could be the zone for another buy. As I said, we need to buy it lower. 50, 50, 50, 60, this is the zone for another buy. 50.30 is a stop loss and 51.00 is target. So this is buy spot, this is sell spot. Okay? And yes, Dinas is saying it's good to play safe this week. Indeed, I agree with you. Why should we trade? Guys, remember, sometimes not having a position equals to having a profitable position. Do not forget it, guys. Okay? Do not forget it. It's very important that you understand the concept. Sometimes not having a position equals to having a profitable position. Market plan for Australian dollar. Guys, again, it's MPC meeting minutes. So would you trade during meeting minutes? Again, a lot of fundamentals this week. Fed on Wednesday, MPC meeting minutes on Australian dollar. If you want to trade it, think about it. Again, think about it. Do not rush, because you already know that the analysis is good and that we are usually right 80% of the time with the analysis. It doesn't mean that you should trade this, guys. I'm really talking to you as I would with my best friend. If I don't trade, I'm not sure that you would trade it. I know that you are tempted to enter a setup, but as I say, treat it very cautiously. If you get some pips and you're in the trade, get out, close the trade, and then wait. This Wednesday will be volatile. Remember, mark my words. If rate hike happens, that will be the first hike in 10 years. So please do not underestimate the power of institutional money. It will be volatile. Yes, guys, this is my standard typo mistake. I will correct it. So as you already know, I usually make typos like this. Yes, 0. Of course, 0, guys, 0, not 1 point. Everything is 0 point something, okay? 0 point something. I will correct it afterwards. Yes, position buy is and sell is 0 point. Tight stop loss is just because we don't want to risk a lot. If trade happens, it will happen. But if trade moves in the opposite direction, I really don't want to lose 50 or 60 pips if you want to take the trade. And also, I was putting really strong levels in this session recap. I want to buy really at the support and sell at resistance. Because of that, that is a tight stop loss. Two reasons, okay? Apostolos, two reasons for tight stop loss. We want to buy at support, sell at resistance, but also we don't want to risk a lot if we are supposed to take any trades. Due to impending Fed's meeting, all trade suggestions should be taken with extreme caution. And you can see that we will have MPC meeting minutes. Neglect the typo, I will correct it after the webinar. So it should read 0.7170, 0.7210, 0.7140, 0.7380, 0.7400, 0.7250. Okay, let me show you Australian dollar. 7300. We have a lot of confluence of sellers here, and you see that previous triple top has been sold into. Look at this. So this could be a rejection from the region 73, 73.10. See a lot of historical sellers here. See, breakout, another sell. So this could be a sell if it happens. Sorry, it's 73.80, but pay attention to 73.00 also. I knew that I needed to put this on slide for you. 73.00 and 73.80. This is topmost resistance. One additional explanation, as I said, is if we want to take some trades prior to Fed meeting, we want to do it at support or at resistance. So the price could reject from 73, but also this could be an ultimate trade if it happens. 73.80 rejection. If you want to buy it 71.70, again at support. This is historical support, so it could yield some pips. We want to lower our risk as much as we can. So that is why I'm saying try to, if you want to trade before Wednesday, take these trades at support or at resistance. This could give you another possible setup, but because MPC meeting minutes, treat it with cautious. Okay? So this is a possible sell. This is sell, this is buy position. Tight stop losses. Tight stop losses. As I say, we want to be cautious. And if you are in the profit, take your profit with you and do not trade before Wednesday. You can trade safely if something happens today, but we already see euro dollar. Maybe if it comes within POC, you can re-enter euro dollar trade, but definitely never take these trades on Wednesday. Even if they are 100% okay, do not take it. You don't want to risk a lot. Robertus is asking, what do you think? How many pips dollar goes in Tuesday? I don't know, Robertus. We'll see. Tuesday is tomorrow. So there could be a range. And I think that a lot of pairs will be ranging today just because we have Fed's meeting on Wednesday. So I presume that there will be a range. Dollar CAD 36.20 buy, 35.70 stop loss, 38.50 target. Sell is 38.50, 38.70 stop loss, 36.20 target. So dollar CAD. As I say, 36.20, this is zone for buying. A lot of confluence here. And zone for a sell is at H3 weekly Camarilla pivot point. Watch this. Historical rejection here. So this is dollar CAD setup. Confluence here. historical support, historical resistance H3, open up weekly chart, watch the history repeating. A lot of rejections, guys. Look, from this level here. Dollar yen, sell position is 122.50, 122.80 stop loss, 121.00. Buy trade is 190.30, 190.00, and 121.00 is target. Well, Roberta's euro dollar could go 200 pips in a direction. We will see. I'm yet to see what. I really need to see what will happen with euro dollar initial spike. Really, I need to see it, because if forecasts are met, we could see really a sell-off, then maybe a buy on euro dollar. But we need to see. I don't expect that euro dollar will tend to 1.05 or something. Yes, guys, I really advise you not to trade on Wednesday. Yes, 4-hour time frame, it doesn't matter. You can open 15 minutes, 1 hour, and you will see a lot of movement. A lot of movement just before, during, and after Fed's announcement, especially during the conference. So it's up to you whether you will trade it. I don't see any point to risk a lot if you don't have to. Really, why would you trade on Wednesday? Is there any point except human greed? What did I teach you? Do not be greedy, guys. Do not chase the market. Wait patiently, and market it will always come to you. Yes, Dinas is having a good point. We can always observe the price action and learn more than risking more. Indeed. So you can observe the price action, and now I know what you are thinking about. You usually think, okay, I will only watch the price, and if you see that you could make 100 pips with this analysis, you would say, okay, why didn't I listen to Tarantula? Well, guys, why would you? As I say, don't be greedy. Ilya is saying open a small $100 account 5 minutes before long short with 0.05. I don't know really what can happen, and I don't want to. I think euro dollar, as I stated in my interview with Forex Street, you can see that there is already bi-directional movement in euro dollar. Sell buy, you can see it clearly, and it's happening now. So I think that it could be also on Wednesday. Initial reaction could be sell euro dollar, then there could be initial buy. Or if something happens and we see euro dollar bouncing to the upside, it can be followed by a strong sell afterwards. So don't judge, just wait patiently and see. Okay, guys, this is okay. My slides have gone. Yes, here I will. Okay, move to dollar yen. Yes, dollar yen. So let's see dollar yen. Dollar yen. So guys, this could be, as I mark these levels on dollar yen, 122.50 and 190.30. Sell buy. 122.50 is here, guys. 4-hour time frame, confluence, EMA 89, H4, M bearish pattern, and historical selling breakout. You see breakout, retest, continuation. So this is a good zone to sell into. 122.30 to 50. So if it happens, it could be a sell. Okay, it could be a sell. Buy is 190.30 with 119 stop loss. You see, there is a lot of confluence. So this is very fast analysis, guys. Very quick outlook. I don't have the time to show every single point of the analysis as I usually do with daily analysis on Other Markets website. But you can see the point. L4 78.6 historical buyers. So we could see buy from this level and sell short from this level. So buy, sell within the zone. Max is asking, is that zone not 3 times touch? Yes, it is, but you trade only the first touch, Max. You can trade second and third touches of the zone only if the first touch has not made 20 pips. If it has made 20 pips, then you don't trade it. You don't trade it. Look at euro dollar, it's falling down, guys. Euro dollar is going with this analysis. It's going down. So that is the rule, Max. I will put that rule in a future slide, in the slide of next session recap, and I will do that as in the part where I explain how we trade these setups. So you can take second and third touch of the zone only, and that is the exclusive rule, if the first touch hasn't already made 20 pips. If it has made 20 pips, then you don't take any setup. It's already gone. Okay? So I will roll the slides again and you can ask me questions. And today, guys, I don't see any point in big analysis as we usually do during our session recap, just because now it's end of day and in less than 2 days there will be a big volatility. So be cautious. This trade setup is already happening, guys. Euro dollar. Because the move has started at the same time I started session recap. Pound dollar. Yes, I would buy pound dollar, as I say. But let's see if our POC is reached. Australian dollar. Dollar CAD. And dollar yen. Luis is asking euro dollar is sell position. Yes, I don't know, Luis, what to say. I presume that euro dollar will be sold, so I'm not sure if I would take the setup. If you want to take another sell of euro dollar, if it gets in the zone, then do it as a scalp trade. I don't think that it could be very profitable if it breaks this level here. So you see, we also see possible W on 4-hour time frame. So I'm not sure that you should really take some big sell from the zone. It's already happening, so be careful. Maybe only as a scalp trade, Luis. Dines is repeating that this week is about to learn to observe and be patient with your trades. Indeed. A question, Euro Turkish lira. Yes, I will do that analysis. This is very correlated to euro dollar, I think. Huge correlation. Let me check the correlation. My settings for correlations are 1 hour and 200 bars. So let's see, Euro, Turkish Lira. Yes, huge correlation. 90%, 90 with Euro dollar. It's huge. So it's the same. Sell when Euro dollar is going down, buy when Euro dollar is going up. So they are moving in same direction. Jonat is saying, I also live trade with AM, but I notice differences between price feed between AM and other brokers. Candles look so differently and patterns. Do clients of different brokers have to trade differently? The main advantage of Admiral Markets platform is that the close time of the platform corresponds to New York. So as far, it's not because now I trade with Admiral Markets, it is because of that I think that it's the most accurate. But really, guys, in my honest opinion, Admiral Markets is having currently a top-notch platform, and definitely at this point the candles are very accurate, the most accurate. As you can see, my AQ pivot points, I'm exclusively using AQ pivot points with Admiral Markets because candle time with Admiral Markets is perfectly accurate. It corresponds to New York time, and it's very good to trade. So definitely my decision is, guys, I have watched some other brokers how they do, but trust me, they don't have the power of Admiral Markets platform. Liquidity providers, correlation matrix, candlesticks, even VSA analysis, volume spread analysis, works great with Admiral Markets compared to other brokers. That's my opinion. I wouldn't have placed my money with Admiral Markets if it was other way. So definitely be relaxed. You don't need to worry about anything. The only thing you should worry is your risk. You should never go above 2%, because if you cross 5% risk threshold, your account is danger zone. And that is the time when neither I nor Admiral Markets can help you. So that is why I'm teaching you to be a professional trader and to trade with professionals and to listen to our advices. That is why we have so much accuracy with trade setups and general management. You need to follow the rules, because the rules are here and rules are there to be respected, not to break the rules. If you try to break the rules, then we are breaking our own professional trading agenda, and that is not good. Okay, Euro Turkish Lira, it could be sold. You see the same Euro dollar and Turkish Lira, a rejection from this zone here, you see, and probable buy from this or this spot. So yes, Euro Turkish Lira currently is in uptrend, because we have one swing, so this is the third swing, but overall this is still downtrend. So yes, it could be sold from this part, but it's already happening. You see there is a confluence here. Look at this is brilliant. Look at this. Excellent rejection, historical rejection, and then bang, it goes down. So this was a breakout spot. Look at this gap here. This is W-shaped reversal gap, guys. Look, this could be traded. Remember, common pattern, when we trade gaps, we were talking about common patterns. And this is V-shaped reversal. Look. Here, the gap was closed. This was breakout point. Look at this. historical sellers from this spot, and again happening. If it reaches this zone, I think it could go up. Okay, let's see another question. Tricky question. Did you try to trade with other brokers before? Jonat, yes, I have traded before Admiral Markets. I've used 2 other brokers, and to be honest, I am very glad that I don't trade with those brokers. Of course, I cannot name it, but one was a very, very famous broker, and it almost went bankrupt. It happened, I think, in the year of 2010, as I remember. And I was trading back there as a head trader with a UK firm, and we traded on institutional account, and we were very, very lucky not to lose because that broker went bankrupt. So luckily for us, yeah. And after that, I never ever switched. I also traded with one big broker before that, and all I can say, I'm perfectly happy and satisfied with Admiral Markets, and all of my accounts, and I have 5 different accounts, are exclusively with Admiral Markets. You can trust me on that. Ilya is mentioning a name of a big broker. No, it was not that one. It was other broker. I cannot name it. It won't be professional for me to name it. Dinesh is asking, how would the gold react towards interest rate hike? Well, gold will react heavily because it has a correlation with euro dollar. I think if euro dollar goes down 100 pips, gold can go down 500 pips. So the reaction should be the same, guys. They are moving in the same direction, and it can really be very, very nasty that we try to take any gold trades. So yes, they're moving in the same direction, indeed. So you should be very, very careful. Gold usually has a lot of movement, and also, as I say, you should be very careful. I don't recommend to trade gold before Fed's meeting. Stella is asking, can you repeat please how much we should risk per trade per day? Usually how I do it is 2% per day. So if you have 4 trades in the same time, you should divide 2% with 4. It gives you 0.5%. So my rule of the thumb is in between 0.3 and 1% per trade. Not more than 2 to 3% per day. Iliad is saying this means that we can buy at eBay 1/10 of Oz gold physically. Okay, guys, I'm not buying the gold. I'm not trading the gold. Yes, gold is okay. Gold has good movements, but guys, really, it can get nasty if you get the opposite way. When I am comfortable with gold, I would start to analyze it, but only when I'm 100% sure that it follows my analysis, as with other pairs. Don't ask me, guys, what were the names of the brokers before Admiral Markets. I really cannot tell you that. But the only thing I can say is, as I repeated it, I have 5 different accounts with Admiral Markets, and I'm perfectly happy how it goes. Really, I don't have a single objection. Especially ECN account is perfect. Robertas is asking, plus 500 doing stop loss TP hunting. Don't trust them. Robertas is saying that plus 500 is doing stop loss and TP hunting. Okay. Well, guys, when we talk about brokers, what were the first rule to check when you want to trade with a broker? you always need to watch for license. Remember, the strongest license in Europe is FCA license, UK's license. And that is very, very important that broker have it. Ilya is saying MF Global was bankrupt. Well, okay. I cannot tell you now, really. Stella is asking, where can I find a risk management calculator system? Send me an email, Stella, and I will give you the script. You should place it in the scripts folder. Okay, guys, I will dollar yen pin bar. Let me see. I will go through these slides again. Then I think we are over. So let's see. Euro dollar, which is already happening. Pound dollar. Stella, you're welcome. Dollar, Australian dollar, sorry. And this is a typo. It's 0.71, so this is a typo. Dollar CAD. And dollar yen. Pin bar, dollar yen. Yes, this is a pin bar indeed. Now look at daily, it's being rejected. So as I say, this can go two ways. So that is why I put two scenarios possible for these setups. Indeed, up, down, up, down. See, yes. Okay, guys, so that's it. Let's see how the movement will be. I hope that we will, I can say that we will have great trades because I personally will not take any big trades, maybe scalp few and there, and that's it. But let's see. We need to be rational. Always stand with both legs firmly on the ground. Yonat is saying you share such sane knowledge. Thank you, Tarantula. Thank you, Yonat. I'm always trying to be realistic and to give you the best possible update on the current market conditions. Thank you, guys. I wish you a great week. Do not overtrade. Be with me soon with Chris. Follow us, our webinars, our traders blog. And guys, I will repeat. Michael has just joined up. Yes, I will repeat it. And guys, if you want to relax, take a look at these movies I have posted. Try to watch some movies. You will be entertained a lot. I can guarantee you. Okay, Australian dollar, dollar CAD. Michael, this is for you. And dollar yen. Have in mind, Michael, that we are already in euro dollar. So this setup has already been happening. It's happening at the present. This setup. It's being rejected while we were having a webinar. It's rejected and it's happening. But as I said, Michael, I need to repeat to you also. Due to impending Fed's meeting, these trade suggestions should be taken with extreme caution. My advice is not to trade, if you want to trade, only take scalp trades, try to grab some pips and get away from the market. Sometimes not having a position equals to having a profitable position. So don't rush in a trade. It will be better after Fed's meeting. This is pre-Fed's analysis and you should treat it as that. Okay, guys, so euro dollar, pound dollar, Australian dollar. Yes, the webinar is being recorded. It will be uploaded tomorrow. Dollar CAD and dollar yen. If you made some 15, 20 pips with euro dollar, or if you're in a trade, put your stop loss to break even. Guys, thank you for listening. I will be here with you again, and let's hope that 95% of you will listen to my advice about trading, pre-Fed trading. Thank you, cheers, and trade safe.